repayment holiday allowed by South African banks in March and April could soon expire. The repayment breaks came after concerns from some homeowners about how to pay mortgages during the lockdown. Even though the South African Reserve Bank lowered the repo rate to help ease pressure on consumers, some experts say there are two sides to the market. Our business reporter Wandisa Ntengento has more.
While COVID-19 is ravaging the economy, homeowners and prospective buyers have been granted a silver lining. The prime rate fell to 7.25% this year. On a new home loan, this translates to a significant saving, but in this distressed economic climate, one property expert says the current market has two sides to it.
I think as expected, we're experiencing pent-up demand in the market where transactions that were due to take place in the lockdown period are now obviously taking place post-lockdown. And so the market is quite active. Obviously, from a general perspective, it's logical to assume that there's going to be increased distress in the market, that people are going to take some more difficulty in terms of paying off their mortgages, that it's likely to be a buyer's market with some distress selling around, and also that many of the sellers who are in a position where they don't have to sell are probably going to wait and see what trends materialize in the market as time goes on and as the virus, the position around the virus becomes more apparent.
South African banks offered a 3-month debt repayment holiday in the months of March and April. However, this debt repayment break is expected to come to an end soon. TransUnion's research shows that the proportion of consumers who are concerned about their ability to pay their current bills and loans has been steadily increasing, reaching 91% in week 4 of the lockdown.
Within FNB, we've seen in the last months, even during the lockdown, a number of our customers either falling into arrears or asking for some sort of assistance. As banks, we had made a decision that we will assist customers with some form of a payment break. Within FNB, we took the decision to have a cash flow relief plan and as well as a product-specific payment break for customers that require such assistance.
TransUnion says the amount that consumers expect to be short in paying bills in the near future has decreased by 6%. To close this gap, many are borrowing heavily against their savings, up significantly by 8 percentage points. For Newzroom Afrika on Channel 405, I am Wandisa Ntengento in Johannesburg.